Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar initially struck a high of 78.82 yesterday after the more upbeat local unemployment figure that came out. The announcement revealed that 19,800 jobs were created last month, with the employment rate also dropping from 5.6 to 5.5. However, the Australian dollar did slip after the Chinese data release, which showed that the Chinese economy grew by 6.8% annual rate, and retail sales expanded nearly by 9% per annum. However, the technical view is still holding to a negative outlook, and any advances towards 78.85 to 79.1525 as a potential sell. And I still look towards down to 78.25 and lower, with my objective holding at 77.80 to 77.20. The euro, after flirting around with the 118 handle in the European session, now rallies towards this 118.5 level. It should be noted that the dollar index has slipped slightly, but it's now trading around 93.10 above the 93 handle, which seems to be a bit of a psychological level as it keeps dipping and gaining at this rate. My view is, though, that we still look towards the top side and target the 93.80 level with any dips to essentially find support at 92.40. So my view for euro is to eventually turn away from this level of 18.5 and look down towards 117.90 to 117.25.35 and reassess from there. For those playing dollar yen, well, the view came through yesterday that I wanted to get out of my longs after they were established at 111.60.65. So from the rally, I was concerned that from this region would fail, and you can see has completely. And now with the strategy of buying on dips, I'm looking towards 112.25 to 111.60. From a technical point, it is bullish, so we could easily see a recovery from 25 and look back towards the recent highs and reassess from there. What was noted overnight for the dollar view is that Janet Yellen is speaking this weekend. But firstly, in the economic news is that we had the US unemployment claims, which plunged by 222,000 yesterday, well below the estimate of 240,000. But there was good news that the Philly Fed manufacturing index jumped by 27.9, crushing the estimate of 21.9. Now this weekend we do have Janet Yellen speaking from Washington. In recent press, the questions are being raised whether she will hold out her term and be reappointed when it expires in February 2018. It has been reported that Yellen apparently is keen to serve for a second term, but I think President Trump has got different ideas. It was reported that his candidates are Jerome Powell, Kevin Walsh and John Taylor. Now John Taylor is tipped to be the favourite, as he is very more in terms of hawkish in comparison of Janet Yellen's dovish approach to interest rates. With all that being said, though, at the moment, if we do get someone like John Taylor coming in, it would be more substantially stronger to interest rates, which currently hold at 125, and may put a different view on the Fed's current rate hike, which in turn should strengthen the US dollar. So you can see why I like dollar yen and like to play it on dips. The pound slipped overnight and now looks towards 131.2025. However, taking in consideration that the retail sales in the UK declined by 0.8%, well below the forecast of 0.1. The UK consumers are feeling the pinch, with the inflation running well above wage growth. As well as Britain's labour market remains tight, the strong employment picture has failed to translate into stronger wage growth. The Bank of England is widely expected to raise rates this coming month, on November the 2nd, when they get together another meeting. But most of the Bank of England policy makers are a little bit more refrained about hiking rates. They want to see more signs of weakness, and a rate hike should be postponed in November. So let's see how that plays. If it does come through, then we should see a strong rally in the pound. Gold rallied a whopping $14 overnight from 76 up to 90 and now currently flirts with this level. I believe the market will rally on further and look towards targets of 97 to 99 to the recent highs of 05 to 06. Any pullback should find support at 82 or from yesterday's base at 76. Silver also rebounded from that 80 support level and as you can see now looks to challenge not at 25 but up to 45 as it currently plays around this level of 25. In his view from a technical point, we still like to see a little bit more support from these indicators to support my target at 17.45 to be achieved. Dips on the day likely to find support at 16.95. And to wrap up with oil, yesterday I was a little bit concerned that the fact that we've seen some weakness coming into the market now with the dojis and also the rejection from 53 now turns the focus back towards the lower side with 51.5 taken out overnight. I'm looking down towards 50.80 or even lower to $49.60-70 a barrel and reassess from there. Well, that wraps up today's webinar. Thank you very much for joining me this morning. I hope you have a wonderful day and an excellent start to the new weekend.